You are listening to ChartingWealth.com for Tuesday, the 5th of April, 2016. What do we have going on? Well, the week opened actually down for the day in the total market as shown by IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund that we have been tracking. We have a two-day trend line that we've set up on our two-day candles. And what do we see happening? Well, we have a down red open box candle and a Heikin Ashi type of candlesticks. If you don't know what that is, Heiken-ASHI. That is another way of doing candlesticks rather than just the standard open, close, high, low. It's done a little bit differently. We've got some good training on that. We have some new training going to be coming out in the next day or so on it. We like that kind of candlestick a lot better than the standard one. It helps get rid of a lot of fluctuations and such. But we saw the market down 0.38% as it opened in the week. We do see the derivative oscillator moving lower and lower and lower. And we see the MACD, the moving average convergence divergence indicator. On our charts, it's shown by a blue line and the red signal line getting closer. That is converging. We don't have a crossover down yet. We're still above the two-day trend line, but we are watching closely. Now let's look at our 4-hour chart, see where we are. We ended the day with what's called a doji. That is a lot of indecision, and it does appear that we're getting close to a down move. We didn't cross over going down on the short chart, but the derivative oscillators lost energy. It looks like the chart's getting ready to move down. It hasn't done that yet. Don't forget, some potential market moving news is going to be coming out on Wednesday from the Federal Reserve. We're still above the two-day trend line, so we'll continue to watch what's going on. We're still in a confirmed up move on the big chart and the small chart on the total market. So down 0.38%. Now we're going to range back out to the two-day chart. We're going to go over to SPY, which is a Standard & Poor's 500. That's an exchange-traded fund by spiders that tracks the S&P 500. 500 big companies, lots of the volume in the market, still above the two-day trend line. Had a bit of a down day, 0.32%. Total market down 0.38. S&P 500 down 0.32. We have the derivative oscillator losing a lot of its energy, and we have the MACD and the signal line getting closer together on the big chart. Now we're going to look at the smaller wave. That is the 4-hour chart, about a quarter of the size of the big chart. What do we see going on there? Again, like the total market, we're getting closer to a crossover with the MACD getting much closer to the signal line and the derivative oscillator still in the positive but losing energy. So we'll continue to watch. Don't have a doji at the end of the day. Had an up morning and a down afternoon. So we'll continue to watch and see what happens. Now, going to range back out on the two-day chart. Lastly, as far as our indexes go before we get to gold, we're going to look at the Qs. Qs was down over the course of the day, just as much as the total market, 0.38%. We do have a hammer. We have an open red box with a wick on top and virtually no wick on the bottom, still above the two-day trend line on our two-day chart. Really don't have the MACD and the signal line getting close together. In fact, the MACD, the derivative oscillator gained some energy. The box got bigger. Again, the NASDAQ 100, as represented by the Qs, is of course the technology sector. What do we see going on our intraday or 4-hour chart? See, in the morning we had an up move, a pullback in the afternoon. We do have a converging. We do see the MACD rolling over, coming down closer to the red signal line. That has not happened yet. We do see the derivative oscillator losing energy. So we could be getting set up for a short-term pullback and crossover going down on the small chart, but it hadn't happened yet. Still well above the two-day trend line. So lastly, we're going to take a look at gold. Now, gold also was down. It was down the most for the day, 0.67%. Gold crossed over going down on the two-day chart back on the 15th of March. And has continued to move down, slid sideways for a couple of, about 4 days between the 17th and the 21st of March, and then slid sideways the 29th through the 31st of March, and then has been moving down on our two-day chart since that time period. Now, if we look at, we're going to need to actually redraw our 2-day trend line because actually the market moved above that, but closed below that. Now we've redrawn that 2-day trend line, and if we look intraday at what's going on before we get there, we do see a widening, that is a diverging of the MACD and the signal line, and derivative oscillators heated up just a little bit moving down. We look intraday, what do we see? We see that the market was up a little in the morning, down in the afternoon on the 4th, below the 2-day trend line, the recently redrawn one. We did have the derivative oscillator crossover going down in the afternoon, which is a good sign for continued down movement. Those of you who looked at getting into gold back when it crossed over on April Fool's Day should be fairly happy that it continues to move in that same direction. Did have an email from, actually on, not Twitter, but YouTube, we had a question from someone wanting to know, they had been trying to find some inverse gold funds to buy virtual trades in, and they had found one that had a huge spread, like a couple of dollars between the bid and the ask. They asked for one that was easier to use and cheaper between what you buy it at and what you sell it at, and I recommended GLL. Please check that out if you're looking to jump into an inverse gold fund. Now, for those of you who are newbies that don't know what that means, it means that it's a fund that goes up when gold goes down. That's what's so cool about investing in the market these days, is you have lots of inverse funds. In fact, every index that we talk about, including gold, you can find an inverse fund for the total market, an inverse fund for SPY, and an inverse fund for QQQ. In fact, one that I've used for years, QID, is a double inverse. So when the Qs is going down, QID is going up, twice the rate, so approximately. So anyway, that is where we have ended the day on Monday. Started off a little bit down for the week. We'll see how things develop. Don't forget, there's some Fed things going on Wednesday. If you haven't listened to our weekly review and forecast, please do that. We'll give you the review of what happened over the last week. Look at the weekly charts, where they stand on all of the charts that we look at, and also tell you what might move the market throughout the course of the week that just started on Monday. Thank you so much for listening to us. We appreciate you. We love to hear from you. Follow us Facebook, Twitter, Instagram, YouTube, you name it. We are there. We are here for you. We love to help. Thank you so much. God bless from chartingwealth.com.